Like you'd be top tier. You'd be in this upper echelon of trading.
How's it going, everyone? Welcome back to another video. Today we're going to be looking at the market recap for Tuesday, July 25th. So just to start off, I told the Discord this week and a bunch of people on Twitter that I was going to be cutting risk this week just to ensure that we don't get hit with any sort of weird market conditions like FOMC that's happening tomorrow or earnings because there's 150 companies in the S&P 500 this week that have earnings. So expecting a lot of volatility and some weird market moves. So we're only looking for those A plus setups that we talked about the other day. And if you haven't watched that video, I'll link that video right here so you can go see the difference between our A plus setups and our low risk setups. But first of all, I just want to go through the model today. We'll go on and mark out our highs and lows for the overnight session and talk to you guys a little bit about that. So our session low happens to be right here, and that gets put in, and we raid the session low, and we get this beautiful fair value gap right here. And as you can see, we don't end up coming back and retracing to this fair value gap, which is unfortunate because that would have been a beautiful entry that actually started the rally for majority of the day today. We can actually drop on the 3 minute and see if we had an entry. No entry in the 3 minute. Entry in the 2 minute. Nothing really on the 2 minute. And on the one, let's see. And really no entries on the one either. I mean, we have this tiny fair value gap right here, but on a 1 minute setup, that's not something I'm really considering taking. So we do get that nice setup this morning, and I'll walk you through all the steps that we're looking at here. So the first thing we got is our session low raid happening right here. Second thing we got is this market structure shift with this high. I mean, if you wanted to consider this your swing high, or you could even consider this your swing high. When we take this market structure shift, lots of displacement closing above this, so you know we're gonna that's put in as a market structure shift. We're not just wicking, we're displacing above. And here comes the fair value gap right here. So wait, first of all, let me mark market structure shift, and we get fair value gap with displacement, because that's not really a small fair value gap. That's a large fair value gap. We're displacing. We're also closing above this bearish fair value gap right here. So I would also consider that our market structure shift. What you could have used today, actually, this is more advanced theory, but what you could have used today was this bearish inverse right here, because we get above it and we close above it and then we return back into it. So it actually would have been a nice entry for the model if you're using these advanced entries. That's something that I haven't really looked into much, but after seeing this, I might start to consider that and look into that a little bit further. And let's just calculate our risk to reward. So our stop would have to be to the low of this candle at least. Really not that bad of a stop. Just short of four handles, which really isn't terrible. And bringing us to our high right here would have offered just under 2 RR, but that five handle first partial target was definitely in reach of being in the high. And your final high was over 2 RR at almost 10 handles right there. Next thing we're going to look at is the next setup. So this is really beautiful right here. This is an A plus setup. This is where we're looking to take this week. Setups like this. You have all of the things that meet your criteria right here. But the next one we'll work through is the afternoon session. Recently, we've been getting some very good trades in the afternoon session. This is second day in a row, I believe, we had a nice trade occur in the afternoon. So if you don't trade the afternoons, I would look into that more, just to make sure you're not missing out on some clean entries, because recently we've definitely been having some success there. And I saw someone say that this was our session high rate. I don't know if you can see. Let me move this real quick. This wick right here rated our session high, and that's actually incorrect, because this line, any high or low that gets put in on top of these lines, is in the previous session. Okay, So this high gets put in on this line, so it's in the previous AM session. So let's just say, for example, this was a high right here of this was a high of a session. That would be the high of the previous session, that being the overnight session. So session gets put in, or session high gets put in right here. So I'm still not looking for any shorts until we take this high back out. And we take this high out right here. But what do? We leave behind these equal highs right here. Okay. And it's not to say that I'm not going to take a trade when we have equal highs above, but it's uncomfortable because we're always talking about those ICT entries where he's quotes and says smooth lines get made jagged, right? So this is one of those things that you want to be cautious of. Luckily, we didn't get an entry around here, so we didn't have to worry about that. We rally up again, take these equal highs, and then we start to get some good down movement here. And I'll show you guys a trade that I took. I was actually able to execute this on mobile today, so my entry didn't come at the greatest time, but I was still able to get 5 handles here. So from this fair value gap, I'll walk you through the, the stipulations and criteria that we're looking at. So first thing we got is the session high rate occurring right here. Second thing we got is market structure shift. So this is a little bit more advanced because you got to look a little bit deeper into this, and you can't just look for those swing highs and swing lows. You got to look for um, bearish fair value gaps that or bullish fair value gaps that aren't getting violated. Okay, so high is 75, lowest. Okay, so right here, I mean this isn't anything too special, but we get a one tick fair value gap right here actually. One tick fair value gap right there that we just blow right through. Okay, so that's the first thing that we're looking at. Second thing we get is this volume imbalance that we also close below. So really nothing is telling me that we want to go back up or be bullish here because we've blown through one, two, three bullish PD arrays. So in my eyes, that's our market structure shift, being able to close below all three of these things. So I'll go on and mark these out for us. So being able to close below all three of these, in my eyes, that's a market structure shift because we've all heard ICT say the quote of if three of your PD arrays get blown or get violated, then you're effed, right? And this is exactly the same concept. Three of these bullish PD arrays get violated through, so we're not really looking for anything long after that, right? So that's our second condition was this market structure shift right here. And the third condition that we are looking at is some sort of fair value gap with displacement, right? And that comes right here. So we get this fair value gap right here. And this is a little sloppy, but I'll just draw a line. This fair value gap right here with displacement. And the last thing we're going to be looking for is that our 5 handle target is within range of some sort of liquidity. So this 5 handles is in range of at least this liquidity right here, which we do take out eventually. And I wanted to make sure that I got out of this trade before 4 o'clock because, like I mentioned, we have tons of companies with earnings this week. So that's why you see this candle right here, this giant earnings candle. I haven't looked into who it was yet today, but um, yeah, so a lot of volatility going on. So 5 handle, a target within reach of liquidity. Okay, so right there. And as you can see, it's 5 handles, and we get under 2 RR again, which is okay because we're not shooting for a high win rate probability. We're going for, or excuse me, we are shooting for a high win rate probability. We're not really going for a high RR strategy. But nonetheless, that was the two trades that happened today. Um, really, I mean, tomorrow, going into tomorrow, that with FOMC, I would say be cautious, right? A lot of people aren't going to be trading tomorrow, and me personally, I probably would not trade tomorrow. And I'll be away, so I most likely won't be taking any trades either unless I happen to hop on mobile and see a setup that convinces me otherwise. Okay, so that's the way I like to put it. If something's not convincing you to take a trade, and if you can think of any sort of reason why your trade wouldn't work, then don't take it because expect high volatility tomorrow. We have these Federal Reserve rates coming in, so it's really going to throw the market off. We're almost at all-time highs on ES. We've already hit all-time highs on NQ, so it's going to be a really interesting time to see if we end up raising rates, which I think we do personally, and then we drop down a ton, or if we happen to lower them or we keep rates the same. So it's really not worth playing. If you're up this week, just sit out tomorrow, wait for Thursday and Friday, and we should expect good waters for trading on those days. But nonetheless, if you guys want to see more on my content, I'm pretty active on Twitter. I'm posting these trades daily, what I'm looking at, and the types of setups that I'm taking. You guys can probably learn some good stuff from there. I posted a thread the other day, and people seem to like it, so I'll probably keep doing stuff like that at least once a week. If you guys want more content or want to get more involved in stuff like this, then be sure to like, comment, and subscribe on the page. I'll keep doing these videos just because I enjoy them. I'm not doing it for the follower number or anything like that. And then lastly, in my bio on YouTube and Twitter now. There should be a link to my link tree, and in there, feel free to go in there and join my Discord. It's completely free, absolutely no cost. We just have a lot of people in there who talk throughout the day. Good to ask advice on the model that we're talking through. Most of the people in there trade this exact model that I'm teaching. So it's a good platform just to learn and ask questions. So if any of you guys are interested in that, don't hesitate to join. And once you join, just add me and we'll have a conversation. But I appreciate you guys watching. And as always, be safe, good trading. Catch you in the next one. Peace.